Hello, everyone. Welcome, Waseem. I know Sarah right before this was very enthusiastic to have you on. Happy for you to join us.
Thanks for having me.
I am so excited. Waseem is like a, billion time founder. So I think his journey is going to be really invaluable to a lot of our listeners.
Yeah, so why don't we kick it off with that as Waseem? What are you doing now? And then also, what are your other billion other ventures that you've done?
And many successful ones, I should add.
Sure.
So, plenty of people start lots of companies and have failures before they have their big hit. But Waseem has, just parlayed success into success into success. So I think his journey is going to be very inspiring.
Well, I appreciate the kind words. So maybe I can just start briefly with what we're up to now, and then we can kind of talk about that journey. So we're currently running pilot.com. We do accounting, tax prep, and CFO services for other companies, principally technology startups, but companies of a variety of shapes and sizes. We have a team of full-time accountants on staff, and then we have a team of software engineers that builds tools we use internally to do the work more accurately, more reliably, more consistently. And so ideally the experience is like, the world's best accounting and tax experience at super scale too. So you get all the benefits of the fact that we do this for thousands and thousands of companies in a way that kind of the legacy providers can't. And we've been doing this for about 7 years. We started the company in early
Yeah,
2017. Sequoia, Jeff Bezos, Stripe, a bunch of other folks are investors. But the path here is like a very long and circuitous one, which is the way that kind of we got started in our entrepreneurial journey is my co-founders and I were all at MIT together with Sarah, a bunch of classes with Sarah, actually.
Yeah, but you forgot to include me in all your successful companies. Where was I
Well,
when
you
you were
seem to be
telling?
doing just fine, Sarah. So I don't know that you were
Sarah,
harmed
you're
or
doing
anything, right?
fine. You're doing fine.
So we were all at MIT together with Sarah. And right out of school, we started a company called K-Splice. This was based on my co-founder Jeff's master's thesis. We had some technology that could take software updates. I'm sure you've seen that pop up. It's like, you must reboot, install new updates. We had some
Yeah,
technology
yeah,
that could take
yeah.
those updates and basically magically transform them so you could apply them on systems while they're running as opposed to needing to reboot, which is,
Right,
that's not really like for your laptop, but for server systems where the downtime's expensive and you want the security patch, like there
right,
was kind of like a very, very interesting use case there. And
right.
when we started that company, we knew nothing about anything. Like, we just had literally no idea how to do a company of any kind.
Like we all do. Yeah.
Yes, that's how I think everyone begins, and I think it was very enlightening. We learned a lot. We bootstrapped it. We, like, all lived in a gross little row house in Central Square in Cambridge and, like, ate a lot of ramen or whatever. We did it for about 3 years. Oracle ended up acquiring it,
Yep,
and so we were at Oracle for basically a year and a day to transition over the tech, left, got essentially the same founding team back together, started another company in the group chat space. It was a company called Zulip. It was making like a kind of Slack-like application while at a time when Slack was still making a mobile game. I would say we identified the opportunity well. Obviously, we did not execute that well in the sense that it didn't become Slack, but happy
right.
ending to the story. Dropbox acquired it about 2 years into it. So we all kind of came out to California, were at Dropbox for about 2 years, kind of working on product and engineering before starting Pilot. And the common thread on all of these is like pain we had basically in previous ventures,
Right,
which is like the
right,
pain behind
right,
K-Splice was the pain that my co-founder experienced managing server systems at MIT himself. The pain that we started Zulip around was the pain of like needing a robust group chat tool while doing K-Splice. And the pain of Pilot was the pain in running both of these previous companies was like, we
right,
just had very, very unsatisfying experiences from an accounting and tax perspective. In the first company, I did it all myself. In the second company, we hired a firm, but like weren't that impressed. So the through line on all of these is really problems we ourselves very viscerally had.
And also, I would add, like, kind of unsexy problems
Yes.
that I
Yes.
don't think a lot of people want to solve. But you guys were and gal were willing to solve those problems and, now sexy markets because they're big markets and big opportunities, but like
right,
not everyone in the world wanted to build accounting software or case plays, or like even group chat was not sexy at all at the time
Totally.
for businesses. Uh,
Yes.
so I think that, the one of the inspirations I have taken away watching you and, your co-founders over the years is just like, do the thing that is a real business that solves a real pain point, not necessarily the thing that is the most exciting thing ever, because you can get excited about a big business. And when we, made our pivot into childcare, that was very much like an inspiration from you guys of like, okay, here's the big business and big opportunity. It might not be all the sexy stuff we wanted to build initially, but it's where the opportunity is.
I totally agree. Like boring is super good. Big markets are super
I
good.
agree. I agree.
Being willing to grind is super good. And I interestingly, and I don't know, maybe I'm just like a weirdo in this way. What you just said, Sarah, resonates very deeply with me, which is like, look, the mission matters. I'm not saying the mission doesn't matter. Like, of course it does. But I've found that like the things that really govern my day-to-day happiness are like the team and like, are we solving a big meaty problem? And like there's joy in like the craft of doing it. And
Right.
you know, am I deeply, deeply passionate about startup accounting? Like, actually, now kind of, yeah. But like when we first
Right.
started the business, like, no, I was like, ugh, this is like a thing everyone has to do. Like, let's see if we can make it a little bit better.
Yeah, and I think that's where like a lot of first time founders kind of or even second time founders I definitely for all of our listeners they all know that like I hate the hype cycle. So my last company was the Uber for shipping when Uber and Lyft and all of those other on demand startups were going, and there was just like a race to capital. And you don't really have a lot of defensibility. You have a lot of competition. It's really hard to make it in the market. And so if you have this like unique insight into some problem that you've had or that you've experienced other people having, like that is really, if probably if you looked at the numbers as far as like successful companies, that's usually where it comes from. It doesn't come from being and uh beat it at a horse here, but like AI or crypto or like rewind to whatever hype cycle was before. It really is solving those more or less like seeming boring companies that people aren't really paying a lot of attention to, but you have this some sort of insight that nobody else has, or as you mentioned, you're just willing to kind of like grind it out and figure out like how to actually solve this better than anybody else out there.
So I'm guessing that just judging by how big Pilot has gotten and how many years you've been working on the same problem, that Pilot is like your biggest success to date. Um, was it just a matter of being a third time founder for Pilot, or are there like actual tangible things you've done differently this time around to make it so much more successful and bigger and longer lasting than the other two?
I, I think there are big lessons we learned along the way with each of the previous companies that I think helped inform and still do inform kind of how we run this business. I think in the first company, again, there was just like so much foundational, like you knew nothing
Right,
about anything, like
right, right.
how to run a business, like how do you attract and retain employees, like how do you like do basic sales and marketing stuff. There's really just like learning to operate the machine, I think was a big just like thing we spent a bunch of time on at the first company.
Yeah.
I think in the first company also we were not that thoughtful about market size, basically.
Mm,
I think for us in the first company, like we had this cool technology that like was Jeff's master's thesis, and we're like, this is cool. Like we want this. Like maybe some other people will want it, and like that was like the level of rigor we did on like,
Right.
could this thing be a good business? We're like, well, we would buy it, I guess. Um, Whereas in the second company, I think we were much more attuned to this idea that like, listen, every knowledge worker has this problem. Like if we in fact can build the group chat tool that businesses use, that is obviously like a multi-billion-dollar company. And like, of course, that's true. Like you see that with with Slack and Teams and all these other people. And I
Yeah.
think we just like thought about that more. And I think we had a better intuitive sense for like the orders of magnitude of like how big could it be. So I think that was one.
Yeah.
Um, the second one, and I don't know, maybe I like overcorrected on this. Like a big lesson for me from Zulip was at Zulip we had built this thing. Like it was a group chat tool, and you can actually still use it. Like as it turns out, like Dropbox open sourced it, and my former co-founder Tim Abbott is like runs a robust company around it, and it's very actively developed and all this good stuff. It has a very very opinionated model of how you should do chat. Basically, like each channel essentially has a bunch of like easy to make threads that have like one word associated with them. It's almost like a hybrid of email and chat in a way. And the cool thing about it is like if you use it, if you're forced to use it for like 2 weeks, like you get it and it like really it's like very, very powerful. I do think it's like much more robust than the chat experience you'd get with Slack or another tool. The challenge is it's like an extremely hard onboarding problem
Right.
where like we're coming to you and we're asking you to do something very different than what you currently do. And I think the big takeaway for me from that company is you kind of have two options. Option one is you come to the user and you say, listen, this basically perfectly fits your mental model. It's a thing you know how to do. It's just better. We're like incrementally faster, cheaper, or more delightful, or we have better mobile app or whatever. But it's like the same thing you're kind of expecting. That's option.
Right.
Option two is you ask them to do something new and different, and they're kind of like hesitant. And the way that you get them over the hump is there needs to be that carrot or that like light at the end of the tunnel that is immediately visible. You have to bring them some value right away to have them overcome the friction of your new weird thing. And I think with Zulip, we like never quite figured that out. It was not just like plug and play, like you use it instead of using IRC or Campfire or Slack or HipChat or whatever. It wasn't you just like drop into it and you know exactly what to do. It was different.
Right. Right.
But the benefit of that differentiation was not immediately visible. And so what is the lesson of that for Pilot? Well, as I said, for Pilot, we do accounting for companies, again, principally technology startups. And very intentionally, we said, we're not building accounting software that you use. We're just going to be your accountant. And like your interface to us is you hire us. And there's a point of contact here who like owns your account and talks to you every month and you can do Zooms with them. Like it is the exact same kind of abstraction or interface as the kind of legacy accounting firm. And the
I,
reason we did that is we don't want you to think like, oh, what is this? Is this like a weird different thing? No, it's just like you hire us instead of hiring another accountant.
I'm really curious. So, Justin Kahn started a company called Atrium,
Yes.
that was basically like your outsourced lawyer, and you can kind of, make the comparisons between tax and accounting software. And what I think that, what he found out is that it just takes, there's just too many people that you actually have to have in the background, and you can't actually automate enough of it. Do you think that that applies to what you guys are doing? Or do you think that you're able to automate more of the flow, to essentially be a software business versus a services business? That I think that, he would kind of explain Atrium as essentially turning out to be, even though that he was able to, I think he raised $100 million or something like crazy like that. Um, what are your thoughts on that?
Yeah. So I'm very bullish on these sorts of tech-enabled services. What I of course refer to as like Pilot for X. Like, oh, I'm very bullish on like Pilot for legal or Pilot for IT or Pilot for HR or whatever. Like I'm a big fan of the model. I think it has a lot of promise, and I think it is further accelerated by a bunch of the new LLM stuff. Like not to lean into the hype, but like fundamentally there are things that historically were done just by people
Right.
that today can be done better by a thoughtful mix of people plus software. Now,
I basically have built a prototype of Pilot for legal, which is that I like when I need custom contract, I will have ChatGPT write it, and then I'll just send it to my dad, who's a lawyer, who charges me nothing, and I'll be like, "Can you just like look this over? We think I
That's
need
a
like a
cheat code.
one
That's a cheat code.
Right, but like you never have the time to like write a contract for me.
Totally.
But if it's like a short like partnership agreement, I'm like, can you just like make sure this is reasonable? And he'll be like, yeah, that's fine. You don't need like a big thing for that. Or like there's been times where he's like, no, you actually need like your legal
A
team
real
to do
lawyer.
this and
Yeah.
review this. And then we have lawyers that we pay, but they're really expensive.
I
So
love that.
I feel like this is already possible, and like, people will figure out how to make like the easy legal work not cost $500 an hour.
I definitely agree. So here's what I like and I dislike. What I like is, look, this is obviously the future. There's stuff in a lot of these kind of like old school traditional services industries, whether it's legal or accounting or whatever it is, where everything is done by hand, basically with the absence of technology. And the pilot thesis is not we will build like an AGI that does 100% of the work. The pilot
Right.
thesis is there's a big chunk, not 100%, but not 0%. There's a big chunk of the work that the computer could and should do. And actually, that the computer will do better than the human. And then there's some leftover portion of the work where you actually want a smart, talented person like using their big brain on like the tricky edge casey stuff, kind of exactly in the way that Sarah just described. So I'm very bullish on the model. The challenge is it's hard. It
Yeah.
is hard because structurally two things are true. Thing number one is anytime you have humans in the mix, and I think you basically have to for these businesses. I don't believe it is possible today in 2024 to build the fully automatic AI does your accounting or does your legal like chatbot or whatever. Maybe it will be in the future. I don't think it's possible today. So you have to have a bunch of humans. And having a bunch of humans, and ideally, like you have a bunch of smart, talented people, like everyone at Pilot is like a full-time US based accountant who sits in our offices or like, like, or at least did pre-pandemic. Um, and that's because like the tricky stuff you want like experts doing. You don't want, the cheapest possible person doing it. You want someone who's actually going to be good. But when you have a
Right.
bunch of people, by default, your gross margin is the gross margin of a services business.
Hmm.
Whereas like tech people are used to the gross margin being the gross margin of a software company. So you have to manage gross margin and be thoughtful about gross margin very, very aggressively from day one. And if you're not, what happens is you wake up and you like may have a bunch of revenue, but you have a bunch of revenue with like pretty garbage economics. And like congratulations,
Right.
you built a small accounting or a legal practice, but it like isn't scalable because you didn't like build the right tech and it doesn't have economics that are actually interesting to venture investors. So congratulations, you like started a small law firm or a small accounting, which is like it is known possible to do that. Like that's not a very interesting hypothesis to like prove or disprove. Like of course it is possible to start like a small boutique like legal or accounting firm.
What started first for
But
for
they
you
can make a lot of
guys?
money too.
Yeah, I don't think
Just
they're
to make
bad
small
businesses.
legal firms like
Yeah.
I
Yeah.
don't think it's a bad business, by the way. Like people like talk shit about lifestyle businesses. I actually like kind of love lifestyle businesses. It's just if you thought you were starting a venture scale, like I want to
you
do this
can't
for
raise
your
Yeah.
$100
money.
million
Yeah.
Right.
dollars like
Yeah.
Patreon.
Yes, you gotta the funding method has to match your plan for the business. And when those are out of sync is when you have a problem.
What started first for you guys? Were like obviously this is like as you mentioned, like gross margin is really important, and you guys are a technology company. Did you start with like a lot of awesome accountants and kind of built like a kind of front end that they would do all the work on the back end, or did you go fully automated initially because you knew that you were essentially starting a venture back and scalable business with really high gross margins?
So there was a human in the loop from day one. And I think there are two reasons for that. One is it's how you get the best results. And two is it's actually what the customer wants. Like, what are you buying when you hire Pilot or when you hire any accounting firm or law firm or whatever? It's like, yeah, you're getting the work product. But I think what you're really trying to buy is just the peace of mind of knowing that like someone who knows what they're
Of
doing is
course.
taking care of it. And so literally in the earliest days of Pilot, we called up a bunch of our friends who had startups and I asked them, I was like, hey, what are you doing for your accounting? And if they said like nothing or like I'm not that happy with what I'm currently doing, I'd say, cool, congratulations. Like I'm literally gonna like do your accounting in QuickBooks And like, so Jeff and I would be there, like literally doing the accounting in QuickBooks, and Jessica would be looking over our
Right.
shoulder and like writing the first lines of code to like, actually build some software that lets us do this stuff, more accurately, more reliably, more consistently. And it, the thing that was cool about that is like you were feature complete with the legacy provider on day one. Like, what do they have? They have a copy of QuickBooks and a smart person. Like, what did we have on day one? Well, we also had a copy of QuickBooks and a smart person. So
Yeah.
you don't have a feature gap that you have to overcome. I think if we said, hey, we have the magic bot, but the magic bot can only do 15% of your accounting, like that's not a very compelling kind of initial pitch to like get someone on board on it.
Yeah, that makes a ton of sense. What other industries do you think, you mentioned the pilot for X. What like in today's world, what other industries do you think that is actually possible to do it in?
The targets that I think are most interesting are ones where the market is big and the existing providers basically don't use technology. Because the
Mhm.
thesis essentially is like there's a bunch of stuff the computer can do that it is today not doing. And if we like were clever about building the right systems, we could enable the computers to do more of the work, which would allow the firm either to do higher quality things or to be more scalable. So the places I would most want to look are the places that have been least like enhanced by technology, or maybe said another way, where like the workflow today is broadly similar to the workflow in 1980. Like literally your experience with like the legacy accountant today is isomorphic to what it was in 1980. It's like they're
Right.
probably literally even just like using QuickBooks, except rather than on in DOS, it's like, in a web browser. But it's like functionally, it's like the same workflows occur. Now, where else is that true? I do think that is true to an extent in legal. I think legal is like a little bit harder, a little bit thornier for a variety of reasons.
Right.
But I would look for these kind of like high ticket size professional services firms, because also the more expensive the service is, the like more opportunity there is to kind of like extract some value or create
What
some value.
can you talk a little bit about? I think a lot of like first time founders don't really they kind of think that their product is going to work for everybody. Can you talk a little bit about like what your ICP is, and like how you've maybe changed that or grown that? And for anybody that doesn't know what ICP is your ideal customer profile. And obviously, I would think there's a lot of people in pilot, I don't that have extremely complicated workflows, or maybe they're high net individuals or something like that. Like, how did you initially like figure out your ICP and then maybe like grow it over time? Because I think that's what a lot of people, they think that their product is going to be useful for everybody, but it turns out that it's not. And the real value is finding that ICP, going after it, and then continuously, hopefully you're able to like scale up and have additional features and everything like that. How did you guys initially like figure that ICP out, and has that changed over time?
Sure. So I think there are three things you want to look for. One is, do they viscerally painfully have the problem? Like, is this a top need for them? Two is, are they early adopter enough to try your stuff? And three is, do you have some mechanism for reaching them? And like, let me give you an example with the first company. With the first company, again, we had this like apply the software updates without rebooting thing. And who most needed that? The people who most needed that were like big financial institutions and like data centers. Like we talked to like a bunch of people at Morgan Stanley or whatever at one point, and they were like, yes, we definitely have this problem. Like we need this capability so badly. And we're never going to buy it from your, like, can I swear on the podcast? What's our,
Of course,
Yeah.
yeah.
like,
Fuck
we're not gonna buy
yes.
from your shitty little
Fuck
company. Like,
yes.
you're just like it's like you live in a gross house in Cambridge. It's like, no, this is like not a real business. We want to buy it from Red Hat. So they like checked the first like ICP box. They very viscerally had the problem, but they were not early adopters. They were in fact like quite late
Right.
adopters, and
Right.
as they probably should be. Like I don't think they were wrong. So for us, the initial kind of intersection in the first company was these web hosting companies. These were people that like in 2009 or whatever would like host your
Mhm.
WordPress site for you, or it's like, and it was like all on the shared infra. They were like constantly getting hacked. Like they cared a lot about security updates, and they were willing. They were like ear- early adopter enough to run stuff from the people that lived in the gross house in Cambridge. Um,
Yeah.
for
Yeah.
us with this company for Pilot, well, we're like, okay, who has this problem very viscerally? Well, actually, like everyone has to deal with accounting. So for us, it was like who are early adopters? And again, the third criteria I had is who can you reach effectively? And for
Mhm.
us, we're like, well, tech founders have this problem very painfully. They're in network for us. There's a reason you should trust Pilot if you're a tech founder, and that's basically leaning on the reputation of the existing founders in the early days. And it's actually an interesting shape of problem because these businesses grow so quickly that it actually like forces you to build the muscle across a range of complexity. Like you have to be good at the like small pre-seed two-person company, and you also have to be good at the multi-hundred people. Like they have a VP of finance, they have a controller. So our belief was it actually was like a good test case, not because it was easy. In fact, in some ways, it was like the hardest variant of it because it would
Right.
force us to like build something that was sufficiently general to work at all of these levels.
Yeah, I also wonder if there's like a component, which I always tell people, like, make sure people already buy this thing. Like, you're not creating a new line item in someone's budget. It's a lot easier if they're already, tech founders already used to paying for software and services. Whereas if you go after like a really tiny business that does their own books, like
Right.
Right.
you might
Right.
struggle to create that line item. Um,
Totally. Yes, I think you really want to look for like concentrated pain, and the best signal of there being concentrated pain is they're willing to spend money to solve this problem. And the best signal for are they willing to spend money to solve this problem is they currently spend money to solve this problem.
So how has like the ZERP era and then like what we've experienced recently like impacted your business? Like were you obviously you were able to come out the other side, but like did that have a big impact when all these companies downsized or folded and you were selling to startups?
For sure. So the benefit of what we do is you have to do it. Like you
Yeah.
don't have to use us, but you have to do it somehow. So in some ways we're like one of the last things that you cancel. But
Right.
if your business stops existing, like yeah, we don't do your accounting anymore.
Yeah.
And a big chunk of our customer base historically has been concentrated in small early stage technology startups, a lot of which just stopped existing, or relatedly, uh, I think fewer of which are being created for the
Right.
same kind of reason, which is like, well, funding is tighter, there's like less of a boost there. So definitely, if you look at kind of like the cohorts of our customers, there are definitely some cohorts in the early days, in the era of free flowing money that yeah, were not particularly healthy and just stopped existing. And that's tough because it's like anytime a customer churns, we try to be very intellectually pure about this. It's like, was this preventable churn or was this non-preventable churn?
Right.
Like, did
Right.
we just like do
Right.
something wrong? Were we not like white glove enough? I don't know. Like, and there is obviously there's preventable churn, but the amount of unpreventable churn we've seen over the past, I don't know, let's call it a year and a half, basically, like, yeah, has been up dramatically. Now,
Yeah.
the good news is the customer base is also like fairly diverse, both in terms of size and stage within tech, and then also like kind of like tech, non-tech. Like we do have a bunch of e-commerce companies and like professional services firms of various kinds. And so the kind of the overall mix like still allows us to do what we do. But yeah, I mean, I was happier from a customer acquisition perspective when there's a lot of free flowing money into startups.
Did you like change your philosophy on what kind of customers you go after now that, you know, maybe tech companies aren't as stable and as good of a customer
I
anymore?
I think it's been a very good wake up call. We have always talked about, listen, the reason we started the business was not exclusively to do accounting for tech companies. It's every business owner has this problem, whether it's the marketing consultancy or the restaurant down the street or whatever it is. And the reason that the market size is like infinity is because all these people have this problem. And that if we're thoughtful about kind of like slow and steady expansion in a verticalized way, where we can really speak authentically to the shape of customer, or like that's really, really interesting. And so it was a good kick in the pants to like remind us that like, hey, like that was the original goal. Like, don't neglect that goal. How do you get really good at serving law firms? How do you
Right.
get really good at serving folks who sell on Shopify? That kind of thing.
Right. Um, you mentioned early on that Jeff Bezos is one of your investors. I think our listeners also enjoy a little bit of juiciness. Is there anything
I mean,
it
that guy,
is
like, I feel like he puts his juiciness out there for everyone to see. So
sure, sure, but is there anything around any stories that you could kind of tell our listeners that are kind of outside of just like obviously we're talking about how to build business and all that, but like as we both know, like I had a business that was high flying, and you now have one as well. Any juicy stories that you could that we could kind of like get out of you as far as I went to Jeff Bezos' apartment, or his place, and this is what he did me, or something like that, or any of the other investors, or anything like
I
that.
wish. I wish. No, not because I have them and I'm not going to tell you. But actually, like I didn't get to talk to Jeff Bezos. Here's how the process worked very briefly, which is he has a person who runs his family office, and you meet with her and you give her the pitch basically. And then she, as I understand it, what I'm told is she writes up like an Amazon style memo.
Of
And
course,
then
obviously, of
one
course.
day, like, and then Jeff Bezos reads the memo and decides yes, no. So like one day over coffee in my head, it's like over coffee. It's like Jeff Bezos is there. He's got like the stack of things and he like reads our company's thing and is like, yeah, approved. So he did personally approve it, which I was pretty pumped about. That like he was there one day reading our thing. Um, the excitement maybe was like less pronounced for me after I did some math and I was like, oh, this is like $50 to him. Like his investment is like on a relative basis, maybe like he probably did not do a ton of soul searching. He's probably like, yeah, sure. Like checks out. Let's do it.
So you can't get him on the phone for us right now.
I'm told, and I have never
oh my
verified this.
God.
I'm told that
Yeah.
one of the perks, according to another founder who has also raised money from his family office, that supposedly one of the perks is you get one phone call. But you have to like
Oh,
it's like a lifeline. Like you have to be very judicious. You get like
whoa,
one opportunity to like
that's
press the like I
juicy.
need to talk to Jeff
Okay.
Bezos button. Again, no one has told me that this button actually exists, so I might someday try to use it and find that like no, this is like a weird urban legend among people who've raised money from Jeff Bezos. But supposedly, like you get that one
If
phone
Well,
you
call.
well,
do your hair like him, you get two
Well, I'm
phone
kind of
ah,
trending in that direction. I'm that, and I'm trying to work out too. I got to get those swole Jeff Bezos.
calls.
what would what would you actually use that one call for? Like, if any founder, like, what would you actually call Jeff Bezos for? It's like,
It, it's a good question, right? Because it's like, well, where is he going to be most impactful? Like another person who's kind of like this, like Ron Conway. Like if you take money from SV Angel,
yeah, yeah,
their whole
yeah, yeah,
thing is
yeah.
like, look, there are lots of smart people at SV Angel, and there are. It's like it's a good firm. Um, they Ron Conway is not just like casually joining like your investor updates. It's like you can like pick
No,
up the bat phone and like call Ron Conway, but it's got to be like a Ron Conway level emergency. I think
right.
probably it's like I need a connection to someone. It's
Yeah.
like, hey, I need like I really need to get in touch with XYZ person at Amazon, or I really need to get in touch with person XYZ. Can you like make the intro for me? It's probably that. It's probably not like, hey, let's like talk about these mocks or whatever.
Hey, yeah.
I
Like,
got
how do
another
you,
one.
yeah.
When your bank shuts down over a weekend and you need like a lot of money
Sure.
really quickly, we
That's a
have
great
one
one.
of those type of investors in Winnie. And like, I mean, like all these funds you raise from, they don't just have $1 million just sitting around in
Right.
cash to like give you to wire over to you.
Yeah.
But
That's
like
totally true.
wealthy individuals usually do. And they can be very helpful to have someone like that get
That's the
involved.
button. That's the button.
Sure.
That's the
That's
button.
probably a
Be
good
like,
Jeff
my
Bezos call.
company is not going to be able to make payroll. We will actually have to shut down on Monday. So can you just like loan us a bunch of money, no questions asked, and like no paperwork asked? Like only an individual can do that. Like a firm can't just wire you a bunch of money.
Totally.
You've raised obviously from amazing investors. How do you think of building those relationships with those investors, and then eventually getting them to invest in you? Obviously, you have a good track record
Yeah. I
before
mean,
Pilot,
I wish my answer were
but
more helpful here. Like for us, sorry, did I cut you off? My audio glitched there for a second. Say again.
I
no,
think
no,
it's
we can hear
Kevin's
you.
fault.
We
Kevin's got some weird thing going on today.
Did
I I can hear you guys fine.
Okay. The question was, I think, like, how did we get connected with these investors, or how do you nurture that relationship? Yeah.
Yeah,
Yeah. And so there's like an unglamorous and unfortunately like not very helpful answer here, which is it is literally the product of the like 15 plus years or however long it's been that we've been doing startups. Like the investors in our second company were people who we like knew and advised us and were in our networks in our first company. And the
right.
investors in this third company were like people we knew and who were in our networks. Like, for example, like the folks that led this, like Index Ventures led the Series A.
Yeah,
And like, why did Index lead, and the Series B too, actually? Like, why did Index lead those initial rounds in Pilot? Well, it's like Ilya Fushman, who's now at Kleiner, and like Mark Goldberg, who was at Index and is now like, I worked with those folks at Dropbox. And they like were familiar with Jeff and Jessica and me and the team and like the caliber of the team. It's like the relationship had been built over the course of many years. Actually, not even in a like we're trying to raise money from you capacity. In a
right,
like
right.
watch what this team is capable of doing. And like when Sequoia did the Series C, like we had talked to Sequoia like basically since the company's like early days, like, and even before that, like when Drew at Dropbox like was starting Sequoia and we were doing the first company, I remember like Drew introduced us to like Brian Schreier, and so like we talked to him in, like 2009. So it's like
Love
it,
Brian.
it,
He's
it
great.
is literally like a decades in the making, and the reason that that's like annoying is that's not very actionable like for people tomorrow, you know?
Well, I think it is actionable, right? Like the way that I see my career developing. So like my first like real venture backed startup Shyp, it wasn't successful, but I know my career is going to be founding multiple companies, and so you really need to harness those relationships, even if they don't sometimes produce money for your investors, because uh, your investors are like your next investors are going to see how you have evolved as a founder, how you actually uh, were working, and what you built previously. And I think that for a lot of first time founders, especially I'll call it YC right now. I'm not a huge YC fan, but I think everybody just kind of thinks that it's just like you build a product and then everything just kind of comes to you, where like you're a great example of like this career long entrepreneur over multiple companies, that you've established these relationships. You've obviously shown that you're able to produce really great products. You're a good person, I'm assuming. I don't know you very well. um
I think Sarah can vouch for me.
Sarah can vouch for you. Also, I'll mention, and in our WhatsApp group, both Sarah and Andy have a competition on LinkedIn followers.
Yeah, you have so talk to us
you,
about how
you
you
have
have so LinkedIn followers.
you have 41,000 LinkedIn followers.
Well, I'm putting in the time, I guess. Here's the story I think on LinkedIn just very briefly first of all, I post regularly, like very regularly.
Yeah.
But the vast
Right.
majority of
Right.
those followers I think came from basically like 2 posts that like, went
Mm.
viral and really gained some
Really?
traction. So it's
Really?
extremely hit driven. It's a very hit driven like thing. And it's like if you look at my like follower count, it's essentially like if you zoom out enough, it's like flat and then like boop, and then like flat and then like boop, and then now flat for a while. So if you're listening, maybe you
Right.
should give me a follow. To the listeners of the podcast, give me a follow on LinkedIn.
Follow Waseem and also Sarah, because
Of
Sarah
course.
is in a fight
Yeah,
with
I just passed him in LinkedIn followers, but
with
only by like
Andy.
100 followers. So it's a very,
I follow
very
you on
nice.
LinkedIn, Sarah.
Yeah.
I read your
Yeah,
content.
so do I.
Well, I am also, I was part of this influencer program on LinkedIn, which you probably do too, where they boost some of your posts. But their big thing is like you got to post regularly. You got to have kind of one tidbit per post. Don't try to make these long essays. Um, and then they teach you a lot about like the format. Like the first 2 lines of your post are really critical. You want to put all the meat in those first 2 lines. You don't want to tease it. You actually just want to say what the post is going to be about in those first 2 lines so people
Interesting.
expand. So those tips actually really helped. And as long as I keep it up, I get the followers, but I haven't been as good about keeping up my LinkedIn posting recently. So I got to get back. This is good
Yeah.
motivation to get
There we
back
go.
on the train.
Let's do it.
Yeah, Sarah, your Twitter is
Kevin is
amazing.
all,
Oh, it's fine. It'll all
yeah,
record.
Twitter though is like, every time I tweet, it's just less and less. Like, I just feel like that engagement is dying off. So I'm trying to develop some new platforms because I'm just worried about, are people going to be on Twitter in a year?
It's interesting because my stuff has done fairly well on LinkedIn. The same stuff like does not resonate at all on Twitter,
Yeah.
or at
No,
least.
it
And
doesn't.
I
No.
guess this is like a depressing. This is kind of like who I am. Like I am more of a LinkedIn than a Twitter.
Well, LinkedIn, I just
Right.
find that the community is so genuine. Like you post a tidbit and people are like, oh, thanks. Or like, oh, but I think this. And whereas on Twitter, it's like, if you post like a real tip, like they don't give a shit unless it's like
Sure.
short and catchy. You got to post like a meme or
Right.
something
I need more
controversial
memes.
or,
Yeah.
if it's like a real genuine thing, like they're just like, why are you bragging? Humble brags. Like, no, they're total assholes on Twitter.
That's funny.
Yeah, that's definitely true. What do
Um,
you what do you think is going to happen? We obviously have to talk about um AI and all of this. What do you think? Like you've been through obviously hype cycles. You luckily it doesn't sound like you created any companies in the hype cycles, and I think that's really smart. What do you think of the current hype cycle in AI? And do you think that it's going to produce? Is it going to be the next computing revolution? Should entrepreneurs go and be building companies there? Do the incumbents have so much of an advantage because of their data? What are your thoughts?
I think 2 things are simultaneously true. Thing number 1 is like, look, you always have to focus on delivering value to the customer. And the customer broadly does not care how that value is delivered. Meaning,
No.
like, if I solve your problem using AI, cool. If I solve your problem not using AI, it doesn't really matter. As long as I've solved the problem, like that's the thing you're buying from me. And so
Yeah.
I think folks need to remember this is like a classic like engineering fallacy too. Is like, oh, I want to build it on like the new stack. Oh, I need to
Totally
use
agree.
Rust or
Totally
whatever.
agree.
It's like no one cares. No one cares. So that's piece 1, which is like just like AI for AI's sake seems totally pointless to me. Now, piece 2 is like I am definitely much more of an AI true believer, whereas I was like a big crypto skeptic, as an example. Meaning,
Yeah.
I do think there are interesting new capabilities or things you can now do that were basically not possible to do in software previously. And I do think that that does unlock a set of shapes of new business that were not previously possible.
Right.
Now, again, I think the way to think about this though is not like, oh, let me go see where I can like use AI to do stuff. The way to think about it is like, okay, what is a segment of the market that is
Yes.
not well served today,
Yes.
that is like big and like where lots of dollars are being spent, and where I can build something where there's a compelling why now. Like the business needs a good why now. The why now could be LLMs. Ideally, the why now is like LLMs and something else. Like I don't think you're always in search of like why your business is relevant uniquely, why it doesn't already exist, why it is possible to do now versus
Right.
previously. And AI might be a component of that. But I wouldn't start with like, well, I want to figure out how to apply LLMs to something. Let me go see where I can like apply LLMs.
Yeah, no, I'm completely on the same page with you. I think that it's a tool that you can have in your toolbox, if it makes sense for your business. But like also over like building in the hype cycles, there's just so much competition. And also
You
I
just
would
launched a cool I'm just remembering a cool AI tool though,
Yes,
right?
that's true. We did. We did, but
oh, what is it?
interestingly, it was not like so we did a thing called quality check where basically you connect up your QuickBooks and like the LLM goes and grades it and it says like, "Hey, here are some like accounting issues that we think you have. Like you should probably get those taken a look at." And and the thing that's interesting about that is like it is basically like a user-facing version of something we had built internally like a long time ago at Pilot, which is when we do
Right,
the books every month, we run a series of checks. Like, so what happens is like your account manager like does the work, and then it's reviewed by another person on our team. And then the software does a bunch of review too, some of which is like very sophisticated, and some of which is literally like a bunch of if statements. But we have a thing called review bot where we spit out like boop, 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 like it's almost like a linter or like a compiler. It's like, okay, here are the errors, or here are the things you'll want to double check before you send this to the customer because like we think these might be wrong.
right,
And actually, like some of these are very hard coded. It's like, well, these numbers are not supposed to be negative, or like this amount is not supposed to be more than 20% of this amount, or whatever. And some of them are just like, well, let's see what like, ChatGPT thinks.
right.
And that's actually like the reason that's cool is like it allows us to do better work for the customer. It's not like, well, we're using LLMs for the sake of using LLMs. It's actually like we're actually delivering a more accurate, more reliable work product as a consequence of that.
Where do you think so we've talked a lot about so typically like our audience are venture-backed founders that are looking to build something really big. But we've also talked a lot about on this show that there's a lot of other outcomes. There's obviously private equity. There's obviously acquisitions. You have experience in that, selling your company's Dropbox. There's obviously going public. What do you think for now that this third time around for you? What and you don't have to disclose if you're going public in the next few months or anything like that, but like what do you kind of like maybe just like thinking about all these different funding sources and to capitalize your business and to um really just kind of advise people on all of the different sources that they have.
Yeah. My take in general is like, I don't think there is one right way to fund your business.
Hmm.
I think for us with this company, we aspire to build something large and iconic and enduring. And the most likely path of that, ideally, the path is like, yes, you go and you build a giant, enduring public company. That seems to be like the way that, some of these biggest, you know, companies are financed and grow. So that's definitely the
Right.
hope. I think at the end of the day, you kind of have to be a pragmatist though about your business. And in
Totally.
particular, to ask two questions. One is like, what is the actual best outcome for the business and its shareholders? Because like, you have an obligation both legally, but also like think like ethically to take care of your team and like the folks who backed you. And then also like, well, what are you trying to do like with your business? And that the latter question is a question you should ask at the beginning. You should not ask it like, after your Series C. You should ask it before you raise any VC money, which is like,
Right.
am I trying to build like a big venture backed business? Or am I trying to build like a small lifestyle business that actually possibly is very profitable, where I own 100% of it and it like generates a bunch of cash like for me and my family and the small number of people that work on it or whatever. Like, I don't think there's anything wrong with that. And in some cases, like
It can be better.
Totally. I think it can actually put a lot more dollars in your pocket, like in the average case, in the sense that in some ways it is much easier. I have to get the math on this right. It's much easier to like build a $10 million business that you own 100% of than it
Yeah.
is to build a $1 billion business that you own 1% of. And like, your stake in each is equivalent. And so I think people have to really understand like, well, why are they doing their company? What kind of company is it? And therefore, how should it be financed?
Yeah. Yeah, that's a good point. Um, to kind of I want to get back to I think we've had a really great chat on building companies and everything that like that. I'm gonna again try to get some interesting stories out of you,
Sure. Yes.
our listeners would like. Um, maybe that is 2 weeks out of cash, and we got our uh somebody to come in, or like I was early on in a business and I lost our most senior engineer or something like that. I think that not a lot of people realize how well they do once they get into it.
Yeah.
But do you have any stories that you think that would be helpful to other folks?
Yeah. I think the two things. First of all, like, look, uh, we probably had like a 95th percentile, like, ease of raising experience given the team's
Mhm.
background and history and the business's trajectory and all that. Like, I think it's basically has been as easy as it could be. But every round, like, I think literally every single time, it like almost didn't happen. And like in the
Yes.
first case, like
Yes.
we met
Yes.
with a VC partner, and this person basically told us like, look, it's definitely a done deal. Like, come to the partner meeting, but it's like kind of a formality. Like, I'm definitely gonna get you the term sheet. Like, I love this business. I really want to be involved. We do it, and then it just like doesn't materialize. And it just like leads to a whole scramble on our side because we like, had driven the process assuming this was gonna like come through. And like, does that mean it's actually not going to? And all this stuff. And like, that is a theme that it like has recurred a lot. Like, I think in any given round, it's like it is it has always been a little bit of an open question about like, well, are we gonna actually be able to pull this off, yes or no? And so my advice to founders on that is like, don't it's not done until it's done. And that's doubly true with acquisitions. Like with the first company in which Oracle
Yeah.
acquired, like we spent a bunch of time talking to the corporate development people at Red Hat, and it like seemed very likely that Red Hat was going to buy the company, and like we talked terms, and everyone was very excited about it. And then at the last minute, they like found some patent that Microsoft had that they thought was related to our stuff, and we didn't think it was related to our stuff, and it just like totally fell apart. And it like went from like, oh, this it felt like within reach to just like
Right.
totally not being there. So I think it's just you have to be very sober, and you have to like you have to be an optimist obviously to like be willing to be an entrepreneur at all, but you also have to be like a
Totally.
realist about it. It's not necessarily going to magically work out, and until it is done, it is not done. So I think that that's
Yeah.
probably my kind of like first thought. My second thing is like maybe a little bit depressing, which is it like kind of always sucks, man. It's like you're big. You imagine like when you're small, you're like, oh, if only we were bigger and I had all these executives and whatever. Like, surely this like would be such an easier, like a much easier job. And it's not. It's not. It's like the problems are different, but I think at every moment, and it's fascinating, like hearing like the Collisons, like you ever talk about this too, is like
Yeah.
I think even for them, like at every moment, it's like uh, there are days when you're like, well, maybe this is not going to work, or like, oh, this is like this is hard. It's like the scale and the stakes and the nature of the work changes, but the fundamental like grind of it like does not change.
Yeah,
No.
I do feel like though, I wonder if you feel this way that it's like it doesn't hit me so hard emotionally anymore. Like
Sure.
the
That's
it
true.
could be like, the seem like the most terrible thing happening, but I'm just like, no, I know we can get through it. Like I built the muscle to know that we'll figure it out. Like it seems really catastrophic, but like it's probably not.
I think that's true, which is there's a certain amount of like, I feel like I have a much better honed sense of like what is urgent or like what will really kill the company. Like in the first company, we spent all of this time like worrying about things that were just did not matter at all, but they felt so existential. And they were
Right,
just actually like totally irrelevant to the business's outcome, as it turns out.
right, right.
Yeah.
Well, I think that we appreciate your time. I think that that's probably a good note to end on. Except for that, you should follow Waseem and Sarah on LinkedIn. And Sarah, plug your intro profile.
Yeah. I have been getting so many intro bookings from this podcast that I feel like I do not want to plug it because I'm like,
Don't
That's
book
called the
oh
neg,
my
Sarah.
god,
listeners. That's called the
I've
neg.
shortened my windows so there's like less slots available because it was a little too much. But I've really enjoyed meeting with founders. There were actually a couple folks that I met with that I did more work for after the fact because I actually thought they
That's
had great
awesome.
ideas and I
That's
made some
awesome.
intros for them intros, and, help them out with a few things. So, like, I have enjoyed it, but I have a day job,
That's the
I need
problem.
to work
You
on.
do? You have a day job? Well, thanks so much, Waseem, for taking the time, and this has been an awesome chat. And for everybody listening here, we're trying to grow the podcast. If you're a longtime listener, we hit 50,000 views one episode. Hopefully, this will eclipse that.
Yeah, this
And
is gonna be the one.
with Waseem sharing it on his LinkedIn
Oh,
You
totally.
get
profile.
47,000 just from that share alone.
Yes. Yes. So, please, and whatever you're listening on, like, follow, and subscribe, and we'll see everybody next time.